Welcome back. You're watching Big Deal, and we are discussing the SVB crisis and the impact on the startup universe. Now, Ashish, is the big reason for the impact on the startup world and the future impact that we are going to see as part of this particular crisis in terms of funding is also because of the concentration of startups in one particular bank, and it largely remains unbanked by the mainstream banks. Is that the root cause of a lot of trouble here?
Absolutely. You will have to just break this down. You said two things. Let's break this down into those two parts. Number one, the concentration. What leads to that concentration? When a startup is beginning its journey, a conventional bank, and this is not about an Indian bank or a government bank, it is true for banks worldwide. No large bank is in that frame of mind and has the infrastructure to be able to cater to the needs of a startup, and neither do they take that constituency as a mainstream constituency where they need to create products or cater to them. The other factor is that when it comes to Indian banks specifically, you can very well go and open an account with a bank which will have a branch in headquarter in India and a branch overseas. But there are KYC requirements and challenges of having a local bank account, which do have a bit of a situation where the startup may not be able to always comply because they might not have a bank account of a foreign company in India. When we look at the other side of it, which is the SVB challenge, you have a bank which is catering to that, so it becomes a bank of choice for the startup. They've done a phenomenal job all through the last 2+ decades in catering to the industry which others thought was not very cool or not very profit oriented. And they end up creating a massive spread and market share. And then you develop the ecosystem. We have internet banking, which makes it easy at the click of a mouse button or a keyboard to get the money out. And we have had runs in the past also, but it takes much longer for this quantum of 20-odd% of the bank's deposit base to be called upon. And then you have a very high degree of social media connectivity in this universe. So the concentration coupled with the fact that the universe is very, very connected to social media, whether it's a WhatsApp group or Twitter or other platforms, led with the fact that there will be a very fundamental challenge that they had at their end in terms of their asset liability management. All these put together created a concentration and a risk which eventually emerged in the form of the crisis.
Right, and we saw the impact of that risk as well. But Nishith, jump in on this. So does this, because of other banks now attracting the deposits coming in from startups, there is also, facilitation towards gift city bank accounts, and there are various other steps being taken. Do you think that this is also a moment where now startup industry is becoming more mainstream when it comes when it is regarding the banking space as well as banking with startups for business?
Absolutely. As founders, we are wired to look for silver linings. The fact that the President Biden himself made an announcement on Monday, Janet Yellen flew back on Friday. Startups are now important and part of the mainstream, both from a cultural aspect as well as the financial aspect. And it's a great opportunity for other mainstream banks to have a look at it, right? People were actually taken aback that SVB had over $200 billion in deposits, and that actually puts it on a significant size of the bank, right? On the other hand, I think the last 7 days educated so many founders about the importance of treasury management in addition to building products and distribution. Then some certain amazing facilities by the Indian government, right? Like the gift city provision, right? Which allows you to park, get a reasonable yield without any FX exposure. More and more founders got to know about it. They will start utilizing it. And then that forms a vicious cycle of government providing such measures, startups using it, and it overall, making the entire ecosystem move forward.
Yes, but so Nishith, we need to...
challenging environment.
Yes.
But yes, there are good things to look out of it.
But Nishith, if I can say that SVB was probably the single largest bank or financial services firm in the world, which banked or had the highest exposure to companies which does not make profit. So I don't know how many banks can take that kind of risk. But Rajeev, also a lot of people think that there would be contagion effect because SVB was not just a bank, was also debt provider, and their venture debt is up for sale, and their LP, they being LP and facilitator of funds for many other private equity and VCs also is an area of concern now. So where is the money really going to come in from? Is it going to put a further pressure on the supply of liquidity to the startup ecosystem coming in from the VC or venture debt, which was anyways constrained because of heightening interest rate cycle?
So, Nisha, you're absolutely right. So the fact of the matter is that we have seen over the last 6 months, a slowdown in the flow of money, very simply because, the dollar has been getting more expensive, and for so the environment has been getting a little tougher. However, I think the big thing that we are facing right now, which I think is very, very interesting that's also happening, is that, this thing is not necessarily going to change the dynamics dramatically more than where we already are, right? Maybe it's going to have a little bit more of an accelerator effect, perhaps for the short run, right? But in the medium to long run, this is not something that's going to change the dynamics of the environment any more than what the dollar tightening or the overall environment sort of tightening or the recession, the yield curve tightening and those kinds of things changing. Those are things that are, I think, bigger in terms of what's happening. However, I think the other thing that we have to think about is, so where is the alternative money going to come from? There, I think we have got a little bit of a cause for cheer, because I think Indian markets have sort of been holding up quite strongly, right? You remember that a lot of this money that we are talking about, particularly when it comes to SVB, is money that's coming in dollars from, folks that are sitting out there, right? So it's not money coming from India, right? So to that extent, because of the fact that the Indian markets have been quite strong, the capital flows are quite well, and because of the formalization of the economy that we've seen in the last 4 or 5 years, we are now seeing acceleration in credit and other cycles that are happening, because of which there is an increased velocity of money that's flowing, because of which there is more money that's already flowing in. There is some hope that over the next few months, maybe a year and a half, Indian money will start to, take a little bit more hold. That, I think, is a hope that we have. Clearly, it is playing out in the funds itself. If you look at the funding realities of a lot of the funds, including the funds that are sitting here, we are already seeing the benefit of Indian ecosystems, generating more money for the funds to be deploying the money into the startups as well, right? So if that's true, it is also reasonably true that debt money and the other monies and later stage monies will also start to flow in from India. That, I think, is a broader hope we have. We have to...
But Rajeev, we have to still understand the collateral damage. Ashish, very quickly, and I have 1 minute each for Ashish and Nishith for final comments. Ashish, how do you see the collateral damage from here on? Because Indian startup ecosystem is mostly developed because of the dollar money flowing in. And if there is a crisis there, the assets in the same space will be much cheaper over there at a time when liquidity is also constrained. So there is a trade-off between an Indian investment as well as the US company investment now, as I see it.
No, there definitely is a challenge, and I don't think the crisis makes it any easier for sure. So I'm not going to even debate on the fact that we are going to be in furthermore uncertainty on how some of those things shape up. But let's put in perspective, I want to highlight just 2 quick things. One, it definitely allows for the Indian banking ecosystem also to take stock on how they can look at servicing this category. It's not the issue that the startups are not profitable. For that, you may not give them credit, but giving other services is a mainstream thing. And imagine if that kind of a volume was passing through Indian banks, even a fraction of it would definitely make the day. And the other challenges, other opportunities for people to take reflections and learn. There are tremendous amount of learnings from this crisis, which maybe we can discuss later. So I do see some positives and opportunities, but the challenge on funding will definitely remain. And we have to wait for the rest of the year to see how some of those things pace up.
But what I'm not answered on, Nishith, and help me understand how grave the crisis could be in terms of the collateral damage and the contagion. Because it will not stop at SVB deposits. It is also the venture debt as well as the equity funding that was also backed by that one institution.
The actual revenue. So even for, say, well-funded startups like us with long runways, the overall sentiment in the business environment will be of austerity, and making revenue sales would take a little bit longer. There may be a little more pricing pressure. So yeah, everybody needs to focus a little more, heads down, and build a little extra.
All right. So it could be trying times for some time, but we have to see the real impact of this one crisis and overall ecosystem getting impacted in the startup world, along with the people and the institutions which were funding it. Thank you so much, gentlemen, Rajeev, Nishith, as well as Ashish, to put some perspective into a crisis which is just about developing, and we are yet to see its impact going forward. With that, it's a wrap on Big Deal. Thanks so much for tuning in.
If you beat me at